Now they can hear us.
There you go, ladies, gentlemen. We're back in the studio. It's just past 8. It is Monday. That means Novak News. Back with the big guys. Mark, we haven't been together for a while. Not in the green room. This is the first time I've been in the green room where the background's working.
What do you reckon?
I like it.
It's a winner chicken dinner.
I think so.
So, guys and girls, this is a live show. So, if you've got any questions you want to throw at us for commercial tonight, us two are going to answer them all. We are readily available in commercial on the northern beaches to help you. And we have seen a bit of a pattern emerging in the last probably 3 to 6 months with commercial assets.
Yep.
It started about 12 months ago, 18 months ago, where people stopped investing in commercial industrial assets that were on low yields. So the yields, people were buying stuff happily, getting a return of 3 or 4%, big assets with some nice upshot, and then they just stopped. Do you remember the 56 Shard Road?
Absolutely, great property, great property. And I think where we're going is the yields. Obviously, with the way the interest rates have come in and impacted the property market, the yields haven't drastically improved. A lot of people do call in and they're hunting that 7 or 8% yield. They're not as common on the beaches as they were maybe 5 or 6 years ago. But a trend that we really have noticed, particularly now in 2023, has been good vibes. I like that. Thank you. A trend towards some of these smaller properties, these smaller commercial properties. They're getting a lot of interest, particularly on the sales market, from buyers that traditionally would have been hunting residential real estate.
So we've had 7 off-market and advertised assets under 500 grand.
Mm-hmm.
And where they've been really popular is they've had to be rented. And they've had
a key part. Yeah,
that's a big part. That's the huge thing. Even if the rents weren't incredible, they wanted to see a yield on the property. And a lot of people are actually putting it in their superannuation. So they've got that sort of money readily available in their super. You can lend on the super as well. Some people are lending sometimes a little bit, but if not, between husband and wife, they've got a couple $100 grand each. That's a beautiful little bite size to buy a little commercial property.
Yeah.
Not enough for a residential, but just enough for a commercial with a tenant, and they're happy just to store it in their back pocket for 20 years, just leave it.
Yeah. So a lot of interest. And I think another draw with it has been is obviously it's quite a volatile market out there across all different industries. But many of these smaller, I'll use the term smaller businesses because that's what we're targeting around that kind of sub $500,000 mark. You've got owner operators that are pretty well established and they're on longer term leases as well. So the shortest you'll find will be a 3-year, but the majority of them are anywhere from 3 to 5 years initial terms with options, again, of a 3+3 or a 5 beyond that. So giving that landlord or investor, a bit more security over the longer term. May not be a huge jump when you're looking at pricing up against residential, but the security's there, and that's been a key part, particularly when you're talking super funds. People want to know that it's just regular and consistent, and they're finding that with commercial tenants.
So what's a typical, out of these small ones that we've been selling, Steve, can we explain to everyone what a typical property would look like? What's your favourite one?
It was one just that we did last week. It was a shop here in Brookvale, G13 at 23 Rogers Street. The building itself about 6.5 years of age.
Yep.
Over there, looking at around, about 75 square meters internal with that one, plus a security car space. In a newer part of Brookvale, Rogers Street is, if people are familiar with the area, the old Brookvale Hotel car park, and it's a modern build, 83 square meters. There you go. With it, but it's a modern build, so obviously the outgoings aren't as high in regards to the strata with it. There's nothing really that's a surprise with it coming up either, but just at that price point, returning, the tenant wasn't on a great rental return there. She was at around about 25 to 27,000 per annum plus outgoings.
Yep.
But that would readily rent for, closer to 30 plus GST plus outgoings as well.
Can I show you?
If you can, I don't know how to do it. If you know how to do that.
I don't really know how to do it, but I'm going to give it a go.
Let's do it. We're going to do it.
See that?
Oh, wow.
See that?
I hope so.
See that?
I can see
I
that.
can't do that. Okay, now it's not there. It's the other screen. I won't share that. We tried anyway.
We did our best. We'll try to put it up.
But have a look at 1323 Roger Street. Good asset to buy.
Modern, clean, quite low outgoings. It is a strata, so you've got strata levies in there too. But being a newer build, you know, not a lot going, you know, expense-wise with it in regards to strata.
And you know what, Steve? A lot of people have got that sort of money.
Yeah, that's right.
It's surprising, and I know we're a growing interest rate environment, but if the government's making you and your wife put together 10% a year into your super, you know, and you know, people earning average 60 grand, 80 grand, whatever they earn as a couple, there's 160. That's 16 grand a year.
Yeah,
you do that for 10 years with wage growth, you're talking a couple hundred grand. Then you do that over 20 years. You've got 400 grand after working for 20 years. That means you're the ripe old age of 37. A couple can have like 400 grand sitting there, if my maths are right, after, right? So they're here, they're now, they got that money, they got that cash, the super sitting in they may have it in stocks. They go, I'm going to buy property, put in property. And that's why these little puppies are doing well at the moment. Yeah. So, in conclusion, what do you reckon? Commercial property?
I think it's pretty good right now, to be honest with you. Even the larger scale properties that we've got, the majority of the people coming into that are owner-occupiers, I've been finding. But if you're an investor and you want something, particularly super fund, I think it's a really good idea. It's safe, it's consistent. As much as the beaches is always growing and developing, commercial is not expanding at the rate of residential. So I think there's always going to be demand for it. Brookvale's got a lot of things ahead of it as well. So if you're looking for that longer term, you know, I won't say slow burn because it does perform well, but if you're looking for that longer term kind of security, it makes a really good choice. And now with options at 350 to 500,000,
they're doing well.
You can get in.
But the bigger ones are not. So the bigger, and that's why I say it was quite shocking. Oppenheimer shocking. Seen the movie?
No.
I saw it on a Saturday night.
It's a beer, is it? A German beer?
Huh?
It's about German beer, wasn't it?
This is so Saturday night. This is, guys and girls, what you got to look forward to when you get to 46.
Don't do this to your friends, mate.
Yeah, it was. So we went and saw Oppenheimer on the weekend, and I looked to my left. There was Lisa sleeping
in the cinema.
I looked to my right. There's another mate of mine sleeping. And then I looked to my right and right again. There's another mate of mine sleeping.
So how many of you watched the movie?
Actually, we recorded everyone sleeping, including me. And then we laughed because 7 years ago, we were very, very young. Very young out there.
What happened?
I don't know what happened. But anyway, that was our Oppenheimer experience on the weekend.
The Oppenheimer.
And the explosion.
But we were talking about the bigger stuff. And
the bigger assets have suffered.
Yeah.
The bigger assets have suffered, guys. So the stuff that's 2, 3, 4 million, the expectation on return, the delivery of rent, of yield, people have really put a lot of pressure on. So people now can put in the bank cash and without any mucking around with tenants, maintenance, repairs, real estate agents, banks, they're going to get a 5-6% return on their money straight away. So a lot of the higher wealth investments, people are just going, nah. And I think that's been a really, really big pressure cooker.
Because there's some really good real estate out there. I think if you've got finances, it's a great, there's some really good pickups in the market. But the other thing I was going to add to that is, look, that in my opinion is very well priced as well. But we've got properties in excess of that kind of $3.5 million mark, and you look at obviously land value's gone up, so your rates have gone up, the interest rates have gone up, but the rental yields, if you're fixed on a 5-year lease with maybe a 5% annual increase, they're just not stacking up anymore, and they're great for owner occupiers. Right now, if you're looking for something and you need to upsize your business or downsize your business, there's some really good buying in the marketplace. But for the investors, not so much anymore.
nuts.
This is one, however, that we do have, Mark. Hopefully it's going to work.
No, it's not going to work.
Where the people can see it.
Billy brings it up on the screen, like on the screen.
We need Billy in here.
Yeah, I'm gonna try.
The property Mark's trying to reference is a property here in DY 643 Pittwater Road, DY. Bit of a landmark building known as Victor Glass. It's a white building on the western side of Pittwater Road as you're just heading towards kind of Brookvale out of DY. Built in the early 50s, I think 51. Was that right? 51. Beautiful family runs it. They've run a very successful, a couple of successful businesses out of there. But the rental returns on this are phenomenal. Not that it's tenanted now, but the projected rent and what you can achieve with it are huge. You're looking at a guide in of around that 2.2, but the yields projected rental returns of 180 to 200,000 per annum. So, it's
That's
fantastic.
A monster.
And
now that
there you go.
a year and a half ago would have gone bananas.
Yeah. But even now, you look at that and you say, okay, I can buy a house for that price, or a little bit more. It's going to kill a residential investment straight up.
So my tip is that right now is the absolute best time to buy a commercial property.
Yeah, I agree.
I think it's an all-time low. The commercial property market's a lot more, I don't know how to say it, but it's a much more quieter, much more calculated. It's not publicized as much. It's harder to find data on. But I'm telling you guys right now, commercial property, these medium-sized, these small, like the small assets, yes, they've done well. It's pretty obvious.
Yeah.
But the medium assets, like anything 3 million, 5 million, and the big assets, I reckon it's a corker time to buy. And I think you'll start seeing those yields on those assets absolutely skyrocket at the moment. So keep an eye out on that.
And I think what you'll also find is a lot of inquiry that we take, particularly on the properties we have for sale. A lot of the buyers say the same thing. They're all looking for a certain yield or for a certain price point. And I think once property does hit that, I think if you're smart, you'll get in now, because that market will reach that point where the numbers do stack up. And as soon as it does, that's where probably, there's going to be 60% of the market that's sitting back are going to jump straight in. So, yeah, I think you're a little bit ahead of the curve if you're buying now. You'll beat the others.
And that's commercial.
Oppenheimer,
the shocking commercial property class explosion, 300 to 500 grand.
There you go.
Even off storage.
Oh, absolutely. Storage is cooking right now. Storage, you can go to anyone.
Love you guys. Have a great night. Hopefully it helped you, telling you about the insights of what we're seeing in the commercial property market at the moment. Love you. See ya. Bye.
Thanks.